Good afternoon, everybody. Going to go over our Forex trades for today, Thursday, January 8th. Pretty quiet out there. There was some news this morning that 7 a.m. Eastern Standard Time was interest rate decision by the Bank of England. Nobody expected them to do anything, and they didn't. So really was almost like a non-event. They didn't even change their QE program, or they really didn't even say much. So really didn't impact markets all that much. Equity markets popped huge this morning, up over 1% at the open, then rallied to be up 1.6% last I looked, about it 20 minutes ago, 15 minutes ago. That's all fueled from, the Fed minutes yesterday indicated that it looks like they're going to be raising rates later rather than sooner, which we've been saying all along, but at least it was in the minutes and confirmed by the Fed. So that helped yesterday's rally. And then after hours, one of the Fed governors, his name escapes me right now, but I think from San Francisco, if I remember correctly, he made a speech yesterday, I don't know, around 6, 7 o'clock in the evening on the East Coast, saying that to raise rates now or too early would be catastrophic. Again, indicating that the Fed's going to raise rates later rather than sooner. Boom. Futures popped higher last night, although we don't trade futures. Helped the U.S. dollar and continued this morning. Futures were up, and that's what made the equity markets pop over 1% at the open. And they've done nothing but grind their way higher this morning. So we did have two trades. We'll go over them here. We did have a U.S. dollar, Japanese yen, which we had 25% of the position on. We got long this last night. I don't know, maybe around 10 o'clock Eastern Standard Time. 119.812. Again, the signal was announced several hours prior. You can see here, we shut everything off and went to sleep. We should have stuck to what we normally do. We normally like to sell ahead of the figure by 4 or 5 pips. And what did it do? Let's see. It ran right up there, right up to 119.95, maybe 119.96. Our goal was to be selling up here around anywhere between 120.20 and 120.40. Figure it was gonna get through that figure of 120. It still may. We only had 25% of our normal size because our stop was, if I remember correctly, down in this area of 118.50, 118.45. So it could very well, if you're still following this, if you're still in it, it could very well pop through it. We didn't put in to sell up right near the figure, which of course we rarely don't do that. And the one time we don't, of course, it goes there and stalls out, right? Go figure. So we came in the office this morning. We saw that it had moved up to the figure, and the figure stopped it and followed back, and it was consolidating up around 5, 6, 7 pips, 8 pips in that vicinity as far as where we bought it. So we decided let's just get out and take 5.9 pips, which is equivalent to 1.4. Okay, all right. Well, if we had sold up here around 94, 95, you would have been looking at another, 7, 8, 9 pips from where we sold it. So you'd be more than doubling what we made. We'd be up there around 4 pips for the day instead of 1.4 size adjusted. So, but fact of the matter is we didn't. So we'll take the 1.4. We'll move on. So far, it looks like the right decision to get out in that consolidation as soon as we came in the office this morning about 6:45 or so. But again, if you're in this trade, don't let it shake you out. You're nowhere near your stop, and this thing could very well run. You do have the other reason why we wanted to get out. We didn't want to be stuck in this thing all day today. Tomorrow morning, you have non-farm payrolls. As you know, the biggest economic number of any month. It could very, very easily adversely affect the U.S. dollar, and create a sell-off. So we didn't want to take that chance. So if we had our thought process was if we have a chance to get out, we're taking it, no matter if it's just a few pips or a bunch. So why is this here? Okay, sorry about that. I don't know why that thing pops up once in a while. Anyway, so we'll take it. We'll run. The second trade was Australian dollar, Japanese yen. This was just a full out quick scalp trade using the indicator. We were short this 96.925. Came in nicely. We picked up 6 pips even, covered at 96.865. Our reasoning was why we covered so quickly. I mean, it's a full scalp, so you're looking to cover quickly anyway. But you have these tops here from a few days ago, the 5th, and a congested area, so it could very easily stop there. Ultimately, that's what it did do, although it did pull the way down into the 70s. So, I don't think you could say, oh, well, you left 10 pips on the table. I don't really agree with that thinking, because if we did cover down here, that's just pure luck, nail on the bottom, But our thought process proved to be correct on this scalp trade, that this area was going to hold as support, and that's exactly what it did. It held and bounced. So we'll take it. So the 2 trades up 7.4 pips. Not great, but not the worst thing in the world. Again, better than a sharp stick in the eye. So we'll take it. We'll move on till tomorrow. If any signals come out, they'll be coming your way. If you're trading now, good luck. And if we do any trades either later this evening or tomorrow morning, we'll have another video for you tomorrow. Have a great rest of your day.